Hello everyone and welcome into the channel. My name is Brent. Now, did the new China and US trade deal just give the market another reason to rally? After the latest agreement, the Magnificent Seven stocks all soared, all but one soared, but is this just hype or is there real momentum behind it? In this video, we'll go ahead and be taking a look at the Magnificent Seven companies. Two of them are still trading below that 200-day moving average, which we'll take a look at here, but the rest of them are doing really positive. We're also going to be taking a look at the new trade deal between the US and China. Are you for the tariffs or against the tariffs? I'll go ahead and talk both positive for higher tariffs and negative tariffs and let you know my thoughts. And then at the end, we'll take a look at the seven magnificent companies and take a look at which one I am eyeing to buy and why I'm kind of on the fence of buying it today. So let's go ahead and get into it before it turns 1 o'clock. Now, let's jump over and take a look at the markets real quick here on Tuesday, May 13th, 2025. We do see a bit of a divide between the Dow Jones, the S&P, and the NASDAQ. Dow Jones is down 0.4%, whereas the S&P is up 1% and the NASDAQ is up 1.85. A lot of this is due to the tech-heavy companies being within the NASDAQ. Tesla up 5%, Nvidia up 6.2%, Broadcom over 5%, Meta up near 3%, and Amazon 1.8%. The other companies here are essentially flat on the day. Google up 1%, Apple 1%, and Microsoft down 0.12%. But Microsoft has had a boost here over the last week, which we'll cover as well, and we'll cover them here over the last 1 or 2 weeks. Microsoft is up huge, which we'll take a look at. Now, taking a look here at the trade deal and talking about tariffs for a bit. The US and China trade deal has finally happened and have agreed to pause tariffs for the next 90 days. So here we see that US and China agreed to slash tariffs for 90 days as agreements are taking place. This is similar to what other countries did between the US as they had higher than expected tariffs announced against them of 45%, but after making an agreement, right, they decided to make an agreement. The tariff percentage was reduced to 10% for the next 90 days, helping not only bring the market down low, but also rebounded it back higher. Now, the US have agreed that China will fall from 145% to now a baseline of 30% for the next 90 days. China has agreed that they will drop the US tariff rate from 125% to only 10%. This caused the stocks going from the weekend into Monday to surge, and the dollar as well. If we take a look at the dollar over the last, let's see, we're in May, so over the last 6 months, the dollar had surged to an all-time high of 109.96 on January 13th, 2025. But between the Fed and, President Trump and Jerome Powell, this whole spiel caused a little bit of a uncertainty whether President Trump will be able to fire Jerome Powell from the Fed and lower those rates. That wasn't showing good signs out there between the US and the Federal Reserve, right? If we have that kind of power, that could be negative. But talking back on tariffs, right? Let's go ahead and chatter about tariffs. And let me know down in the comment section below, are you positive for higher tariffs? Or are you positive for lower tariffs? So supporters of the higher tariffs would argue that they protect American jobs by making imported goods more expensive. This gives US companies a competitive edge by allowing them to price their product potentially at the same price and higher quality, or just slightly higher price, but still better quality than products that are imported from overseas. They also say that this helps reduce trade deficiencies, protect national security by limiting reliance on foreign supply chains, and giving the U.S. leverage when negotiating trade deals in general. Now, a lot of that, outside of potentially protecting American jobs, a lot of that just kind of seems not as beneficial in general for the U.S. consumer. But on the flip side, having lower tariffs usually means that it's lower prices for the consumers. That's going to be more money in your pocket. You're going to have more product choices. They help businesses access cheaper materials, meaning that they're able to stay competitive. You avoid trade wars where you start enacting tariffs of 45%, 90%, 110%, 145%, right? Back and forth trade wars, not going to happen. They also say that supporters say free trade boosts innovation and keeps inflation in check. By having 0% tariffs, that product that they might not want to test out in the US could be purchased. It would be purchased at a very, 0%, right? They could test it in the waters around $30. US consumers could decide, is it a good product? Is it a bad product? Versus if tariffs are high, that $30 product that was boosted with tariffs at 145% would be $50. That's affecting the consumer's buying price. And, looking at that product, you're like, you know what? $50 for that product doesn't seem right. If it was down 25-30%, that would be a bit better, right? But that really pushes a lot of the product options away, and just kind of in general, it lessens product choices by just having higher tariffs. So me myself, I feel like lower tariffs would be more beneficial. Essentially, I would like to see tariffs as low as 10%, as low as 0%. The lower the better. I'm usually for more money in your pocket, lower prices in general for the consumer, and just more product choices. Access to cheaper materials doesn't mean it's cheaper quality. It just means it's cheaper materials in general. So let me know down in the comment section below, what do you guys think? Now, jumping and take a look at the indices here. This is going to be our final area today. We'll see here the S&P 500. As we said, I expected the S&P and the other indices to hit that 200-day moving average and actually retract. But because of the market that we're in, where we live in a tweet announcement kind of market where anything can happen on a day-to-day basis and trade deals can happen, right? This is something we were looking forward to, potentially moving us higher, was that it happened. In the weekend, US and China made that agreement that on Monday pushed the S&P 500 above that 200-day moving average and closed. The S&P 500 is now trading at $588.32. That 200-day is now 573. So we'll see if we retest 573.48. I would like the market to kind of pull back a bit and just retest this. This would show signs that, hey, this is our bottoming out now, and we can move higher from here. But there's still quite a bit of uncertainty out there in the market, so we'll see. The NASDAQ, very similar boat. The NASDAQ here pushed way above that 200-day moving average. As we saw the tech companies get pushed along a bit higher there. 516.81 is the current price. The 200-day is at 491.39. Now, that is not the same for the Dow Jones. The Dow Jones is actually struggling. They had pushed and closed above that 200-day moving average on Monday, but on Tuesday, they're down, what, 0.5% so far on the day at 422.49. If they close below that 200-day, that's going to put more pressure, pulling it down to the downside. So we'll see where this one kind of ends up at. Now, taking a look at the 7 individual companies of the Magnificent Seven. So Meta's one that I am invested in. Like, it's one of my biggest holdings at the moment of individual companies. Individual company, not like an ETF. Meta, I swapped my Apple for Meta a while back on the way down for Apple and bought it into Meta. Meta has done really well. I don't see any issues with Meta long term for negotiation tariffs, right? I think it just kind of got pressured down here in the short term, and it's been doing really well. It is trading above its 200-day moving average, and I don't see any reason for it to have any issues maintaining it. Google, on the other hand, Google McDougal has had a bit of downwards pressure and is still trading near lows at $161.08. So it's still at a really good buying opportunity. I'm going to be talking a little bit about this one in just a moment, but we'll go ahead and proceed on to the next one. Amazon has actually done really well. They blasted beyond their 200-day moving average at $211.88. I don't see any issues with this one either. There was the whole chatter with them putting what prices would be at and what prices would be at with the higher tariffs. Again, I would like to see tariffs down at 0 and having price, more access to more products and more access to just cheaper prices in general. So Amazon, they are going to be affected a bit. I guess the consumer side would be, I guess Amazon has their Amazon, what's it called, their own product lines as well that could be affected. But in general, Amazon's pretty good. Tesla has had a huge change here, right? From top to bottom, they were down nearly 50%. They have had a pretty good recovery here, breaking above that 200-day moving average. Tesla also had some good news that their the Fed, or who is it? They give that when you buy a electric car, you get a tax break at the end of the year. So that's going to be extended to the end of 2025. So that was kind of positive on Tesla news here. So Tesla's traded about that 200-day moving average at 335.43. Microsoft, this is the one that I have watched go insane. It did do a double dip here in April. Had a low, had a second low that was a bit higher. This should have been actually like a good signal to buy into this, but we can see back here, these double bottoms kind of happen frequently, and then we had no end in sight here in January where that bottoming out period was going to take place, but it has skyrocketed from $360 to now $449. Microsoft is just one of those great companies long term. It's very similar to what Google offers, but I feel Google just offers a bit more. So it is well priced above that 200-day moving average. It should keep it, right? I don't see any reason for it to fall. Apple, on the other hand, right? Apple is the second of the two that's still trading below their 200-day moving average. Apple is struggling at the moment at $213.20. It's still struggling. Regardless of the recent news and trade deals and positive stuff that is out there, Apple has had a real struggle to really get back up and above that 200-day moving average. So right now, everything is pulling it back down. But we can see here, this at $213.20. It recently hit this at a high. So if it can continue trudging higher, this would be good news for Apple. But that 226 is going to act as resistance, and we'll see if it can go higher, hit that, and break above it, or if it'll hit it, come back down, retest these 213s before moving back higher. I'm really interested in kind of see what happens with Apple and NVIDIA. NVIDIA is doing really well as well. I don't see any issues with this one here. Short term, it did break above that 200-day moving average at 125.02, now trading at 130.08. NVIDIA doesn't really have much competitors. They say that competition is similar to like AMD, but AMD has different cards. They sell like medium, low end cards versus NVIDIA's like high end graphics cards and such. So I don't see any comparison between these two companies. I think they're kind of on their own moats of consumers and buyers. Now, as far as what I plan to buy today in the next 20 minutes as the market's going to be closing here, I am eyeing Google. Google McDougal. Why I like and still like Google, right? Google has a huge ecosystem. It's massive. Even with Safari scaling back its Google search, Chrome still dominates browser share globally, and Android drives billions of searches daily. Even other browsers out there that are not Chrome, they're still based on Chrome, right? So I use Brave here at home. I use Brave on my phone. It's still Chrome based. AI and cloud are the real growth engines of Google. So here in the short term, people are kind of focusing on search engine, which is still a huge portion of Google. But search may dip in one place, but Google's big upside is the AI infrastructure, Gemini and Google Cloud, which is rapidly growing and could potentially, help change